In this week's Stockscores Market Minutes, we'll talk about whether the stock market is going to crash in 2022. There were some negative signs this past week. Plus, I will do my regular weekly market analysis. We're going to look at the day trade of the week on VORB and run a market scan in search of opportunity. So will the market crash in 2022, or at least soon in 2022? This past week, we saw a pretty substantial rise in interest rates as investors had concern about inflation. And when there's a concern about inflation, the growth stocks tend to fall out of favor. Now, these are the stocks that have led much of the market higher. And when we look at the big indexes, we don't necessarily see a major breakdown, but inside those indexes, there is weakness as the small cap stocks, the growth stocks, technology, biotech, they've really been beat up lately. To answer the question, will the market crash? Pretty simple. You just draw a trend line and look for the trend line to be broken, ideally from a falling top. If there's a falling top, you break the trend line. That usually leads to more weakness. And so as we go through the charts in this week's market analysis, we'll keep that in mind. Now, I've added back the interest rate chart this week because I think it is important, again, as investors start to think about rising interest rates because of inflation. So let's get into this week's market analysis and start off with the US markets. Trend lines are pretty simple to draw. You pick inflection points and you draw lines across them. So I could draw a line like that. That's the steep trend line. Then there's kind of a more neutral trend line down there. You can see that this steep trend line on the intraday time frame was broken, and that telegraphed some of the weakness. And I think in the short term, we could see more weakness. But the long-term chart is still quite healthy. There's the upward trend line on the S&P 500. Now, the caveat on this is that the S&P 500, SPY is the ETF, is a market-weighted index. So there's 500 companies that are represented by the index, but within those 500, some of them have a much more substantial weighting. The larger the market cap, so Apple being the largest, will have the biggest weighting in the index. And if Apple's not breaking down, if Amazon and those other big companies aren't breaking down, you could have 450 stocks within the index really moving lower, but the index doesn't look that bad because the large companies in the index are hanging in. So let's take a look at the Nasdaq chart, and there we are more heavily denominated in the technology names, of course. And here you have your upward trend line right there, and we're right at that upward trend line. Now this is the daily interval, and we have a little bit of a falling top. If we sort of bounce off of this trend line and then break lower, I want you to be fairly bearish about those technology stocks and really the growth stocks, which are more interest rate sensitive. Now, the other area that suffered this week was the small cap stocks. We had 3 days of weakness after the minutes of the Fed meeting were released, which showed concern about inflation, increased the chance that there will be a rise in interest rates, and you can see that breakdown. Now, here we've got horizontal support that goes back all the way to the start of 2021. And you can see that that has not been broken. So the sky is not yet falling. We are not breaking those important areas of support. But certainly you feel it when you trade those small cap stocks. There's a lack of enthusiasm. The buyers are kind of sitting on their hands, and there are some sellers that are slowly pushing these markets lower. The lower they go, the better the opportunity. So don't despair. If there is a crash, it is a good thing. Some of the best market rallies come after a crash. But today we just don't see the signs of one. We are not seeing breaks of upward trend lines from falling tops. What we are seeing is a lack of enthusiasm among the buyers. You know, last year we had some pretty good enthusiasm, and in 2020 a lot. And you see that starting to wane. Will that lead to a breakdown of the trends? Well, that's what we're going to keep an eye on here each week. Continuing along, here is the Canadian markets, and you can see there too was a little bit of weakness this week, but the Canadian market held up better because of the strength in the energy sector. And we look at that long-term chart, we also see that the upward trend line is holding. We've sort of tickled it a few times. We potentially are building a falling top there, but unless we break down through that falling top or through that trend line from a falling top, we shouldn't get too concerned. TSX Venture, those small cap stocks you can see had some weakness there, but in the grand scheme of things, we're sort of stuck in this sideways range. On to currencies, the US dollar, the US dollar has been pulling back for the last, say, 6 or 7 weeks, this little flag pattern, but the upward trend line is intact, and therefore I remain relatively optimistic about the US dollar. Looking at Bitcoin, well, that's one of those growth areas, those speculative areas that have really fallen out of favor in recent months as investors start to think about preservation of capital rather than creation of new capital. There's less speculation in the market. And so, obviously we had that medium-term upward trend line broken. The longer-term upward trend line, which is right down here, is still intact. This upward trend line is really being threatened. So I remain a bear on Bitcoin. In the last couple of months, I've been fairly bearish. The possibility of a bounce back this week is somewhat real because we have pulled back to that trend line, but I wouldn't be a buyer. Maybe in the short term, a trader can zip in and out of Bitcoin. Ethereum, much the same story. It is falling back to its long-term upward trend line, which is where it should bounce, but we don't see a sign of that bounce yet, so we'll keep an eye on that. Onto the interest rate chart, and I bring this one up because I think that was the central story this past week. Now this chart is the ultra short Treasury ETF. What this does, it goes up with interest rates. So if the bond market is going down, then interest rates are going up. So an inverse chart of the US bond market means that if this chart is going up, then interest rates are going up. And that's what's happening right there. We had that little spike higher, which breaks the downward trend line. And I think that that points toward a greater potential for rising interest rates. And if that's the case, then the growth stocks, the speculative stocks, are going to have more of an uphill battle because the enthusiasm around those will be a lot less. Now, there are going to be markets that benefit from rising interest rates, things like the banks, utilities, and so that may be an area where you rotate into. We already saw some money start to rotate into those sectors. On to commodities, and you saw gold weaken a little bit this past week. It's still in what I would say is a slightly negative to neutral chart pattern. Oil made a decent comeback the last 4 or 5 weeks and is approaching its highs. It still remains in that upward trend. It held the trend line, and therefore I remain bullish long term, although in the last couple of months we've been kind of grinding our way sideways. And finally, the fear chart. A little bit of a jump in fear on Wednesday on the back of on the release of those Fed minutes, but it's still a relatively low fear market. So my ratings then on US stocks remain bullish long-term, neutral short-term, the same for Canadian stocks. Gold neutral on both time frames, and oil bullish on both time frames, which is a raise from last week. Inflation concerns caused selling pressure this week as investors worry about rising interest rates. Now, only very short-term upward trends have been broken, so we don't need to run around like Chicken Little saying that the sky is falling, but we can feel that that short-term pessimism is rising. That causes fewer quality opportunities. So your approach for the week ahead, if you are more of a short-term trader, is to be fussy and patient. If you're a longer-term trader, look for that rotation into things that do well in a rising interest rate environment. Gold is stable, oil is strengthening, and fear is low. All right, let's get into the day trade of the week. This is a stock that we traded in active live on Friday for this particular one. It is VORB. There were a number of potential entries based on different strategies that I teach in the active live course material. And the first entry, which I highlight here, is the day trader strategy. The day trader strategy looks for 2-minute action candles breaking from low volatility from a predictive pattern. This was not the ideal setup at 9:32 Eastern. And the reason it wasn't ideal is we had a little bit of volatility into the close. But in that case, sometimes I like to wait for the second signal. The stock pulled back and then moved back above its action candle close just after 10 o'clock. And that started this upward move. I think the better entries on this were the break from the pennant pattern that occurred right there, the break of the pullback pattern that occurred right there. All of those entries worked well as this stock gathered a large crowd. You can see that the volume was abnormal, and that's what we look for. That's what the Stockscores algorithms are looking for, that abnormal volume, abnormal price action, which indicates that money is being attracted there. Now, it's easy to see that with hindsight, but to catch it in real time requires algorithms and really powerful computers, which is what we do with our active live service at Stockscores. All right, now we're going to jump to the Stockscores market scan, which we haven't done the last few weeks because the market's been a bit slow with the holidays. But this week I thought I would run the Abnormal Breaks US scan, and we will set a minimum price for the scan of at least $1. You can always modify a scan. So the presets are there in blue, but you can modify a scan to add in more things if you like. And it found 30 charts. So I then view them in the gallery viewer, and what I'm looking for is a positive chart pattern. And when I see one, I'll stop and look at it for you. So let's just look at GBOX. It had some good strength at the end of the week, but it is not a positive pattern because it is still below that downward trend line, and there's no rising bottom. The bottoms are actually falling. So we pass on that one. Moving along to the next one that I see, which has some potential. It's coming up here because I did this earlier. Here's Vail. So Vail is a pretty good pattern. It is breaking from a rising bottom. So this is called a bottom fishing pattern. You have a downward trend line, broke that right here. We built a rising bottom, and then we broke up from the rising bottom, and you can see there's some accumulation in there. So I give that stock a 6.5 out of 10. Now notice the yield is 22%. That's probably not going to hold. It's abnormally high yield. Typically, when the yields are that high, it usually comes before a dividend cut, but still, it may not cut that much, and the yield may end up being quite positive. So that's something to consider as well. Just always remember when you're looking at yields here that those are historical yields, not necessarily going forward. Here's the downward trend line on VLRS, which is an American Depository Receipt. That's what that ADR means. And that basically means this company is listed on another market. It looks like somewhere in the Latin world it is listed. You can see it breaking from a rising bottom, a little bit of an increase in volume. Resistance going to be up here. I'd give this a 6 out of 10. It looks pretty good, but not great. Continuing along, AMPH, obviously good strength on Friday, but not breaking from low volatility. That makes it a hold, not a buy. Incidentally, I do this type of analysis every single day. That's what Trendlines Alerts is all about. I do a video every day, half an hour before the market closes, looking for good chart patterns on the daily interval for position traders. And so, if nothing else, it's a great way to learn how to read charts, because every day I go through the market scans that I like to follow, provide a little comment on stocks that look good, but also reasons why I would avoid other stocks. And again, that's available at tradescores.com, my other website from stockscores.com. All right, so I don't see anything else worth discussing. We had a couple of potential candidates, a 6 and a 6.5, but I will leave it at that. So if you've enjoyed today's video, leave a comment, click the like button, subscribe to the channel, tell your friends, tell your enemies, and most importantly, trade well.